Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video is for Tuesday, July 10th, 2012, and my name is Chief Market Strategist Gareth Soloway. All right, let's get right into it. Market's cratering here, folks. We're not down a huge amount, but it is a sizable drop nonetheless from the highs of the day. And again, we had a great gap up after word surfaced from essentially Europe about some positive developments, but really the market doesn't care. It's so used to it at this point, and we're just seeing this market getting roasted. All right, bottom line is, look at the gap up, look at the fall, look at the bear flag. It's all there. And again, notice the gap up here above the 200. We could not hold that. That was a key signal. Markets came cratering down. We hit gap fill, got a nice one candle bounce right there, as you can see, and then down we go. We go right to this trend line here, connecting the two pivot lows in the midday and afternoon session yesterday. Bounce, and then look at the formation here. Clear bear flag formation. The market tanks off of that. Comes down, pink trend line of support, bearish pattern, and tanks again. We're now getting a little bit of a bounce in this market, but nonetheless, folks, I mean, it is a bloodbath from the highs. And again, as I said, it's not like the markets are down 200 on the Dow. Dow's only down 92 points. NASDAQ's down 26. S&P's down about 11. It's the key of the gap up. From the gap up, we're sizably down. We're down over $2 or about $2 on the SPY, which is about 20 S&P points from that high pivot. And that's really what I wanted to draw to your attention here today. The other factor that kind of is a little scary for this market is the fact that if you zoom out, you don't really have a lot of support until this candle or this trend line right here, which is around the 133.60 level. And that's a decent amount away. I mean, that is not close by any stretch, and you can clearly see that that's your first support. There's really nothing in between here. Even though you're getting a small bounce, it's just an oversold bounce here. The markets could easily continue down. Your next level after that will be this little pivot high right here, which is at the 133.30 level. And if you go to the blue line here, that's your next level at around the 133 even number. And there's a gap fill down there as well around the 132.80 level. So again, the way I'm seeing this market, from this drop, you have a nice bear flag. Gap up failed. A failed gap up is often very, very bearish for the markets. The markets then resuming their downward spiral here and continuing to break down with support not coming in for a little while on these charts. Let me just see if there's anything else I want to take note of. Scanning through, let's take a look at some key stocks here. Apple's holding up one of the best, and really the reason I attribute to the markets not being down more is basically because of Apple. Apple has rolled over here a little bit, but is still only down about $1.80 to $1.90 on the day. And again, you can see strong Apple pulling back, moving averages, then bear flagged it just like the market, and now is broken down. But again, it's not like you're down much on the markets here. It's a very small sell-off today. In addition, Walmart remains positive on the day. This has been a runner of late. Continuing to be up about 27 cents, although I will say you have a possible doji forming on the daily chart here on Walmart, which could signal a short-term top on the stock. So that's something to kind of pay attention to as well at this point in time. Let me just see if there's anything else there I want to draw your attention to. American Express is positive on the day. Let's take a look at that. There's very few stocks positive and green on the day, but this is one of them. And again, you can see even that's well off the high on the daily. If we go to the intraday 10-minute, you can see again the stock getting a little bit of a move to the downside here. Not quite back to the lows, but look at that area of buy from earlier today. If you're a day trader, you pierced gap fill. Gap fill was right here. You went right to the 50 MA, and look at the bounce you got. I mean, that's an amazing day trading bounce. You got to love that stuff, folks. I mean, that's what profits are made from, if you know what I'm saying. Now we're coming down. You actually probably have decent support at double bottom here. If you come down to double bottom, you probably get another nice little scalping opportunity. Interestingly enough, the markets are falling pretty sharply without the dollar really surging to the upside. The dollar is positive on the day, but with the latest sell-off here in the markets over the last 30, 40 minutes, you would have expected the dollar to really be surging to the upside, and it really has not. This is the UUP intraday. So again, that shows us that there's just relative weakness in the market. And again, I attribute that to the gap up this morning not holding. Also the news out of Europe about, possible new bailouts, blah, 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 blah. I mean, bottom line is, folks, the market is so used to it that it's having less and less of an impact. Plus, you got negative news out of China last night. I mean, China just looks like it's slowing down very, very quickly. Not a pretty sight there. These are all factors that, in my mind, are attributing to a possibility of a bigger drop in this market. So again, you don't want to jump to conclusions because the volume still is not super, super heavy following the holiday, but you have to think that this downward motion on this market is not a good sign for this market whatsoever. All right. Let's see what else we have here, folks. Scanning through, let's take a look at Apple again. Yeah, Apple's still down about $2 or so. Not a big drop there. Still one of the stronger stocks in the market. CMI, we should mention, guys, getting crushed here, but a nice little bounce. You might get a bottoming tail on CMI here. I'm just trying to look at supports. This was a support level on CMI, but we did close below it, although we are bouncing back above it now. So something just to kind of pay attention to. I'm just trying to see. If you were to recapture this trend line here at around 88 and a quarter on a closing basis intraday, you'd probably see a nice move up in this CMI. CMI came out and I think warned on earnings this afternoon. You can see the drop here. This is a big drop for the CMI. I mean, Cummins here is just absolutely getting roasted, but it is oversold short term and could see a bounce. You also have a possible time count here as well, which does signal a possibility of a bounce as well. So again, it's bouncing a little bit. Curiosity, we'll see if it continues to bounce higher in this market. Let me scan through IBM getting roasted today, guys. This is another reason why the markets have rolled over sharply. IBM just absolutely getting demolished. And let me just bring up that chart for you guys so we can take a look on that. Let's see what else we have here. Just waiting for that chart to come up. I'm just kind of scanning through my watch list. Google's down 3. Really, to be honest, Google, Baidu's down 3%, but Google's only down 0.5%. Apple's only down 0.4%. You have a couple key tech stocks that are holding this market up while everything else is getting blasted. Also, some Dow components are stronger today. Coca-Cola, some of the more safety-known plays. I mean, those plays seem to be the ones that are holding up better. For instance, Coca-Cola is positive and so forth. All right, I'm not getting a chart on, there we go. There we go. We got a chart, at least on the daily, of IBM. And here, I'll just focus on the daily then. And you can see the interesting thing and the scary thing for IBM is that it's below this pivot low here. And that's not a good sign for IBM whatsoever. If we zoom out a little bit here, you have to figure this is going to go towards this gap window at around the 185 level. 185 or so would be actually a nice little scalp this afternoon. I might take it myself. And then really as a swing trade, you wouldn't even go near this until it fills the gap down here around the 181 level, 180 level. And that'll be where, you know, I would, as a swing trade, start if it goes straight into this area here, you have a little pivot bottom as well, right in this 180 even number level. That's where I'm going to start to get interested in it. Okay? All right, so let's see what else we have here. I'm just trying to scan through, see if there's anything else of interest. Again, pretty crazy market. I mean, I have to give it that. You know, it's quite something to see this type of sell-off in the market. It's really an amazing sell-off across the board. And, you know, again, the question is, does it hold up or do we get a pop later in the day? Right now, you wouldn't think so, even if we float up a little bit. Let's just go back to the SPY. As I said before, folks, I really don't have any major support on the SPY until this yellow line down here. And again, that was at the 133.60-ish level, 133.50-ish level. So, you know, it is possible we head all the way down there before we get any sort of significant bounce. And that's something to keep in mind. All right. On that note, folks, I'm going to step aside. I got to get back to trading here. Wild market, so I got to be involved here. There's plenty of money to be made. I offer this to you. Come take the 7-day free trial to the Research Center. Research Center is geared towards swing traders and investors. Gives you swing trade alerts, proprietary market guidance, videos, live analysis, you name it, it's all included there. And if you're a day trader, join the Intraday Stock Chat. That's simple. All right. Talk to you soon, folks. Again, here at InTheMoneyStocks.com.